Hi, it's Dennis. Welcome back. Today I want to talk about another issue surrounding an employee's departure from their company. And that is, are you being offered a severance pay? Now, a severance pay is typically some amount of money per year of service that you worked for the company, typically a week or a week and a half's pay per year of service. Well, that severance pay is taxable income in the year it is received. Now, there's a couple of rules of ways that you might be able to shelter that income from tax, assuming a couple of things. One, maybe you have some existing RRSP room that you haven't utilized over the last number of years. So there's a number on the bottom of your notice of assessment from Revenue Canada that says you've got unused RRSP contribution rooms. But quite often, if you've been involved in a pension plan, you don't have a lot of excess RRSP contribution room each year. So you don't have the ability to take advantage of this. But there's another rule that's not as well known, and that is Section 60J of the Tax Act deals with the rollover of a severance pay. And how the rule works is, for every year of service, up to and including, year or part year of service, up to and including 1995, you're allowed to transfer $2,000 to an RRSP. So for example, let's say you started working for your company in 1985, and you're there until today, 2011, and someone's saying, we're going to pay you a severance pay of $20,000. Well, that $20,000 is eligible to be transferred directly to your RRSP, and as a result have no tax withheld from it. The reason it can be, even if you have no room on your tax return where you normally would look to determine if you have room, Section 60J says $2,000 for every year of service. So from 85 to 95, you're allowed, that's 10 years of service, you're allowed $2,000 for each of those years. That can be that's $20,000. That shelters all of that income in an RRSP from tax this year until you decide to take that money out of the plan. Well, what's nice is if you've made your regular salary all the way up until, let's say, December the 15th, so let's say you made $50,000 or $60,000 up until December the 15th, you're laid off and they give you your severance pay December the 26th. Well, that $20,000 would have showed up in income in that year by you transferring it to taking advantage of this RRSP contribution. It then gets sheltered, and perhaps next year you have no income. You can take the $20,000 back out and you'll pay very little tax on it, versus a great deal of tax if you add it to the $60,000 you already made this year. Anyway, it's a wrinkle. You should be aware of it. If you have any additional questions or would like to talk about this matter, please call me at 1-800-580-2791 or come to the website and drop me an email at www.dennisgraves.ca.